Good evening, everybody. We're going to get started here in a couple of minutes. What's going on, Rodrigo? Welcome in, everybody. Welcome, welcome. Going to get this one going in just a couple of minutes. Just going to give everybody the chance to hop on in, and we'll get right into it. SPX 5000 today, 11 cents off. Pretty crazy. Pretty crazy. Got to add some more levels up here. Anybody have any questions before we get started tonight? Going to give it just a couple more minutes for everybody else to stop in, and we'll get going. Outside of that, not much for me to talk about before we get started. I mean, another big day higher in markets. You can't bet against it. I think I mentioned it in this week's review. Things are getting a little sketchy, having some trouble at the highs here. But again, you break above them highs, really can't be short. So can I go over what I like to see in trend lines? I mean, I guess to quickly summarize what I'm looking for when I'm drawing a trend, at minimum, you got to have 2 points, right? You got to have at least 2 points to draw a trend. Ideally, though, you get three because two doesn't really mean anything. I could draw a trend between any 2 points and any chart, and that doesn't mean it means something just because I draw it that way. So generally, you want to see at least three tags of that trend. So for the SP, I think, you pretty much got three for this trend: one, two, and three. So that would be what I'd look for generally in a trend, and it's got to be something reasonable. Um, you know, those are kind of my general rules of thumb. Pretty simple though. I don't really make it too complicated. Anything else before we get started? Going to give it like one more minute for everybody else to hop in, and we are going to get going on this lecture. Going to be mostly chart focused for tonight, so probably not too much PowerPoint, although pull it up on the other monitor. There might be something that's helpful for the evening, depending on what we're feeling. In 1 second. Yeah, we'll take a look at this. Yeah, we'll look at just the first couple slides at this one, just because it might be a little bit helpful. All right, let me send one more message and let everybody know that we're getting started, and we'll get right into it. Simple terms, can I explain the WPOC line on the chart? Yes. Great question. And it's one that I've definitely spent a lot of time talking about, but I totally get, there's always new people coming in and out of here. This WPOC line, that stands for something. It's not just a random acronym, and it stands for weekly point of control. And that line comes from the volume profile here. So we take a look at a little bit more standard view of the volume profile. This is essentially what's called the volume profile. It shows volume traded at different price levels. So all of this, and I'll make it a little bit more visible. We'll talk about this a bit more into the lecture, as this is a pretty big part of at least how I like to find support resistance. But you can see it a bit more clearly there. So at the bottom of the chart, you have volume by time, whereas here on the y-axis, you have volume by price. So essentially this weekly point of control, or WPOC, is the strongest level on the chart. So you can see my level essentially is exactly at that tick. Actually, it's a couple cents above it for some reason right now. And it's one that I pay attention to on pretty much anything I'm trading. So I'm sure we got one for Apple, maybe not. Google, maybe. Yeah, I got them both on there. Microsoft, maybe. Got it covered there as well. So, yeah, that's that. Hopefully that answers your question. I'm gonna get started really quick, and then these are really good questions, John, and also Reddy. I'm gonna take a look at both of those again in more detail. They are both very good questions. So, John, if I forget about your question in specific, um, let me know, and I'll make sure we cover that because I do really like that question, and that is something that we can cover tonight. What's going on, Dala? Yeah, Manikar. From my experience, does this line act as a price magnet? Certainly, this point of control will 100% always act as strong support every single time, no matter what. It's always going to be a key level to be paying attention to. You can just look on the weekly at how we've reacted to this level on the S&P, very clearly significant. You take a look at any chart, I'm sure Carvana's got something there, IWM, big one down here. So it's always going to be a very important level to be trading and paying attention to keep it short there. All right. Welcome to the lecture, everybody. A couple minutes after the hour, I want to just start with a little bit of PowerPoint as we make sure we cover the basics before I get into the details that I want to for the evening. So taking a quick step back, for those of you who have been to my lectures before, welcome back. And for those of you who have never been to one of my classes before, welcome. Excited to have you. For those of you who don't know me, I go by the name of Tostie here in the Discord, and I've been giving lectures for a couple of years now. And definitely one of my favorite parts about being here is giving these lectures. So excited to share this time with you all tonight. And we're going to get going with kind of a bread and butter topic here, really one of the most important things to be mindful of, which is support and resistance, also known as key levels, also known as, I don't know, supply and demand, also known as pivots or whatever you want to call them. Key levels are really the most important piece to trading price action. And I said it in my announcement just an hour ago, but key levels are not only used by traders trading off of technicals, but also traders trading off of fundamentals and also algorithms. And pretty much every vehicle, or I'll say every entity that trades, pays attention to key levels in some way. So this really is one of the most important aspects of trading price action that you can possibly be aware of. And the reason that I bring this up, and why do I have so many levels there? It's disgusting. The reason that I bring this up and really try to convey the significance of trading key levels and being mindful of key levels is that there's so many reasons why a trader might be paying attention to a level on a chart, whether it's a prior area of selling pressure, whether that's a significant fundamental level, like for example, something like T closer to this 1470 area, it becomes close to its value in cash, at least it did last year. Or even if you zoom out on this level like T, it's a support level that's held for longer than most of, or should I say, some of us have been alive, 30 years, right? This is a level that's been holding since 1996. So there is some real significance to some levels on charts, and they don't just come out of thin air. And the reason that I really want to convey the significance tonight is truly because this is one of the most important concepts to not only understand, but also be able to master in the market, which is finding these key levels and being able to structure trades off of them. So those are the ideas that we're going to focus on this evening. I want to get out by starting with just a little bit of PowerPoint here and talking about what support and resistance is, and we'll move into the charts. So couple of terms to be mindful of as we move throughout the lecture tonight. 2, support and resistance. These terms are all these definitions that I have in classes, I kind of define based on my own experience and based on the ways that I think they're defined best. So support, I call a level where buyers are prompted to purchase a security. And resistance is a level where sellers are prompted to sell a security. And this could be for any reason, right? There doesn't necessarily need to be a specific reason that we know why somebody wants to sell T at this, say, I don't know, what are we right here? 3230 area, right? We don't necessarily know why sellers step in at this 32 area. However, we do know that in 07 and 2018 or 2017, they stepped in significant amounts, right? There was a significant amount of selling pressure at this level. Both times we came to visit it. So we don't always know the reason why a level matters, but we should be damn sure that we understand where the most important levels on any chart are. Because, for example, let's say I'm looking to buy calls when T is trading right below this 3240 level, having no idea that this is not only an important resistance level, but it's one that's been important for almost 20 years, right? So you better be certain that you're not looking to trade calls or you're not looking to buy shares right when price is sitting at this key resistance level. And similarly, you better be damn sure that you're not looking to get puts as price is coming into this key level of support, right? An even longer level of support. It has 30 years of history of buyers and sellers stepping in at this area. So if nothing else, you need to understand where these key levels are because it should help you frame your bias on any trade. And you might be wondering, again, as I've kind of mentioned, well, why do people buy and sell at these key levels? And there could be a number of reasons, right? And there's not always a way for us to know the specific reason why somebody decides to buy or why somebody decides to sell at any given point in time, right? So it's important to kind of let go of that specific question because we're not always going to have the answer. We're not always going to know why big money is prompted to buy at this level or why big money is prompted to sell at this level, right? But it doesn't always matter, right? Sometimes knowing helps give us extra confidence in any specific level. Like, for example, this 1520 area is rather important because of the value that purchasing a share of T at this level provides, right? When I was first paying attention to this level was back in late 22. And at the time when price was coming back to this 15 buck per share level, what that meant is that AT&T was trading at a market capitalization that of what it held, I believe, in cash at the time. So essentially, the market was saying AT&T is worth exactly what it holds in cash right now. And to me, that was insanely ridiculous. And to River as well, who all of you should probably know by now, probably one of his favorite stocks we're looking at here. Both of us, it made no sense why T was possibly trading at that level. And as a result, we both got long. And very clearly, it paid off nicely, right? Buying long at that 15 area, took it all the way up. I personally didn't, but it moved all the way up to 22. So about a, 33%, I'll say 40% appreciation in price in just a couple of weeks, right? Or I guess in this case, a couple of months because we're looking at the monthly. But that said, sometimes we do know why key levels matter, but other times we just know that they do matter and we need to accept that. So just wanted to address that question before it comes up. Now, a couple examples of support and resistance. Again, this is a real simplified kind of graphic here, but I figured I'd show it just to get us all warmed up. Again, you could think of support almost like a trampoline, where if price comes into that level, it's generally going to bounce. And you could think of resistance kind of like a brick wall, where if price comes into that level, it's generally going to stop and move the other direction. If you rammed your car into a brick wall, there's a good chance you wouldn't be able to blast right through without trying a couple times. And that's the behavior that we're seeing here, where we see this resistance hold up for a couple of tests, all of a sudden it breaks, and then that prior resistance here turns into support. So the most important concept to understand from this graphic is any level could be resistance or support. So any level that we're trading above should be considered support, and any level that we're trading below should be considered resistance. And again, just another example here, looking at this from not a squiggly line, but a little bit more of a candlestick perspective. And also important to note that support and resistance doesn't always need to be just a horizontal line, right? Sometimes it could be trend lines, sometimes it could be moving averages or other types of indicators or different things, right? So support and resistance doesn't need to just be a level like this. There's a bunch of different ways that you could consider support and resistance. For the purposes of this class, we're generally going to focus on key levels tonight, but just know the reason that these definitions are so vague is because it encapsulates much more than just a price level, right? $14. It doesn't necessarily always look like that. Sometimes it could be a moving average. Sometimes it could be the volume weighted average price. So just want to introduce the fact that support and resistance can look like a lot of things. Yeah, so that's really the basics of support and resistance. Does anybody have any questions so far before we start to move into the charts and talk about actually finding these key levels and how to structure trades off of them? It's only going to get harder from here. So if there's anything that you feel like we're missing or you're confused about, speak now. So that way we're all on the same page for the rest of the class. If not, and everybody feels good, we can move on. Everybody feeling good? All right. Jose's feeling good, so that means everybody else better be. All right. So let's talk through creating some levels really quick. This is a practice that you're going to watch in this lecture. You're going to think it's probably really easy, and it actually is pretty easy, but it's going to take you practice to find high quality levels over time. So there's two things that I look for when I'm looking for a support and resistance level strictly based on price. Number one, I'm looking for areas of consolidation. So this would look something like this, where you can see price spent a good amount of time fighting this area right here. You can see how many candles are coming up to this area of resistance and trying to break above it, right? So this would be an area of interest for me. Another area of interest for me would be things like these pivots, where we see wicks off of a specific area, right? Two wicks on the weekly chart off of pretty much the exact same level. That's something significant to me. And same thing here, we have a couple bounces off of a similar level down here as well. Also, a couple of wicks off of this area here, right? So what I'm looking for when I'm first starting to determine where support and resistance lies is I'm looking for areas, and I'll write this down. Number one, I'm looking for pivots. And what that means is, where has price reversed in the past? And number two, I'm looking for congestion. Where has price consolidated in the past? Those are the two methods I use to find key levels. That's really all it is, right? You're looking at where price has reversed in the past, and you're looking at where price has consolidated in the past. Can anybody tell me why these two items matter? Why do we care where price is reversed in the past? And why do we care where price is consolidated in the past? Does anybody have any guesses or answers as to why this might matter, or why we might care where price has reversed or stalled out in the past? Why do you think that matters? Great question, Dala. I will answer that in just a little bit. Yeah, so can provide a range for you to structure trades on. Jose says buyers and sellers stepping in. What else? Let's try to get a couple more answers in the chat. You don't need to know the right answer. I'm not expecting you to, but throw out a guess. Why do we care where price has reversed in the past? Why do we care about these pivots? Why do we care where price has consolidated in the past? Yeah, Julian, where buyers and sellers showed up. Buyers and sellers have fought. Whatever happened before, history repeats. Stocks like to revisit previous levels because it can occur again. Great answers. Excellent, excellent answers. Excellent answers. Yes, absolutely. The reasoning we care where prices stalled out in the past is because there's a good chance it's going to do it when it gets there again. So just marking out a few key levels here. I'm just going to make really big lines so we can see them really clearly. Let's do it in orange because I like that color for levels. Just mark out a couple levels where price stalled out in the past. Here and here. Price stalled out at this level in the past, right? It's pretty easy to see. We can see, oh yeah, Fernando, how'd you get that? How'd you get that large font? That's crazy. Here you can see multiple candles, I mean, upwards of 6 on the weekly time frame, are touching this specific level. And same thing here, we have 2 wicks right off of this level here, and also another reversal off this level here, and another reversal off this level here. Next, we have a pivot back from 2021 off of this level here, another pivot off of it here, 2 wicks off that level to the cent there, another wick off that level here, and all of a sudden we get above that level. The point being, big money has made transactions at these levels in the past. So you better be sure that they are going to do the same thing in the future. And if they don't, you should take care about taking the opposite trade. So for example, here, big money was clearly buying off of this level, right? We can tell this from multiple reasons, right? Number one, we have some multiple wicks off of this area. And also we can tell that this is the level most accurately because we have these wicks off of this level. Number two, we have increasing volume as price comes in to this key level, right? Notice here, average volume generally right around this area. And all of a sudden we get multiple above average volume weeks as we come into this price level, right? Same idea as we revisit it here, right? We get the largest buying in a real long time when we revisit this level once again. So buyers are still present. All of a sudden here, there's no longer buyers at this level. Not only do we break below this level for, I mean, really the second time we broke below this level here and got bought back up, we break below this level once again, right? And then we start seeing an increasing amount of sellers, which should indicate to you a significant change in the structure of price, right? Previously, this level was support. And let's just draw that out a bit more clearly, right? Previously, this level was support. And I'm going to make this a bit cleaner so you can see what I'm referring to here. Turn those off, turn that on. Boom. All right. Previously, that level was support. Then all of a sudden here, something changed. This level turned into resistance, right? And let me just format this so it's nice and clean for us. All right. Not perfect, but it gets the job done, right? Previously, we saw buyers present at this level. All of a sudden, we saw an increasing amount of sellers coming as we broke below this level, which should indicate to you a change, right? You should be seeing this and think, okay, something is no longer the same here, right? We had a prior strong support that we are now breaking below on increasing selling, right? And that's something to be mindful of. So you better believe we saw a massive amount of sellers come through when we broke this level in the past. So it's very reasonable to expect now, the second time we come and revisit that level, there's going to be sellers there again, right? Notice week after week, 2 weeks in a row, we saw some of the most selling we've seen in a year come through at this level. And this is the weekly time frame. So these are the things you need to be looking at. And these are the things that you need to be paying attention to. Because as we come back into this level, there's not any reason why you should be thinking now is probably a good time to be getting long here, right? It's a horrible idea because you know that there was a significant amount of sellers there in the past. So there's a very good chance that they are going to be present at that level once again. And similarly, when we revisit that level again, this is not a good place to be purchasing calls. It's just simply not. And you'll notice, obviously, we made a significant move higher above that level, right? There's no arguing that. However, it didn't come with a retest or didn't come without a retest. And you'll notice here, we get a nice move right back into that level the very next week. And let's take a look at what that looks like on the daily, right? You can see exactly what happens here. Now we're looking at the daily. We know this is a key weekly level. We have a couple days sitting below this level, right? 4 days trying to get above this level. We get our first day above it here, which, honestly doesn't look great. I can't say that this is any significant breakout, but here, this is a change, right? This bar right here, this should be another example of where you're thinking, something has changed here. You get a bull bar closing near its high above this massive weekly level, right? This is a level where you had a very significant amount of shares being transacted at in the past, right? And let's just take a look at that. Here, right? Massive green days into this level before, and I'll extend this so it's a bit more clear. Massive green days into this level before, only to be slapped down for a significant decline in price. 15% drop the last time we tagged this level. We come back and tag it again. An even more significant drop, 18% drop in price at that level. Here, we make it above that level. Well, we haven't done that in a whole year, right? So something's changed. The reason that I'm mentioning this is at its core, the stock market is always going to be moved by people that ultimately have the money to move it. People like you and I have absolutely no impact on the market. We never have, we never will. That's the truth. So you have to be following what big money is doing. And previously, they were very clearly selling shares into this key level, right? 430 was the level. 429.74 is what it's drawn. 430 is fine too, right? Both times we come and visit this level, it marked a massive top. There is absolutely zero way you can debate that with me. Zero way. And I mean, here on the daily, it's very clear that even before people were trying to buy at this level, right? Then we started to have some trouble, a little bit of weakness at the level, came below it, break back below it again, can't hold above it. Point that I'm trying to get across, and I'm really trying to convey a little bit of a deeper meaning of support and resistance here. So bear with me as I work through this. Again, big money is always going to be buying and selling at the highs and lows, right? At its core, they are the ones who determine where the highs are and where the lows are because they decide to sell for whatever reason, right? Maybe it's news, maybe, fundamentals don't line up anymore, whatever, doesn't really matter. We need to be able to recognize this type of behavior in real time. We need to be able to look at these charts and say, okay, previously we saw significant rejections at this level. We come back to this level again, and instantly we don't see any massive rejection. But all of a sudden, we start to see one developing. 2, increasing volume days down. Price gap left behind, right? Which is a characteristic of a strong rejection, right? Again, you'll notice on the way up, we get some bull gaps higher, right? Leaving these gaps open. Bulls are strong, right? Leaving these gaps open on the way up. Then we get our first down gap after rejecting this level. It's a big change, right? Something is no longer the same. We've come into this key level of resistance. And although we might not have gotten short directly at that level, because, it's not always a good idea. We're not in the business of catching the exact top and the exact bottom. We should damn well be paying attention to once price has 2 above average selling days following that level rejection. We take a look at maybe some moving averages. We come right back into them. I guess not perfect, but regardless, we come back for a little retest higher and are met with even more selling below. And again, just to bring this all the way home, there's very clearly different behavior going on here. We get the same consolidation below that level, but this time we make it above. That hasn't happened in an entire year. This one level, we haven't made it above from April 2022 until June 2023. Almost over a year that we spent below this one level that was very significant. Once we finally get above, you better believe that something's going to change, right? Because people are paying attention to this level, whether you like it or not. People with a large amount of money care about this level for some reason, right? For some reason, they want to sell at this 429.74 time and time again. And once price breaks above it, the people that sold to that level, if they didn't sell, they're going to be sweating once price makes it above. So there's some psychology that comes into understanding these key levels, right? Because now we've broken above that key level, the same one that we haven't traded above in over a year, and people are going to start closing their positions. They're going to say, uh-oh, something's changed here, right? Everybody's going to start to recognize that the market is no longer the same, right? Structure is no longer the same. And you can see this repeated time and time and time again, right? This behavior is not new, right? And it's not something that never happens again, right? Look at this back from July 2023. Big sell day, right? You got a bear bar closing near its low, engulfing multiple days of range. Clearly, sellers parked at this level. There's absolutely no coincidence that once we break above this level for the first time on rising buying volume, right here, we rallied $10 in 4 days. Absolutely no coincidence, because key levels matter, and they matter to every type of trader. They matter to algorithms that went short at this level and are using this as a stop loss. They matter to desk traders who find that the SPY is fundamentally undervalued as long as it trades below this level. It matters to price action traders who look at this level as a higher high, and breaking above that level means that we are still in an uptrend. Key levels matter to all types of traders, and that's why they should matter to you as well, because it truly influences trading behavior depending on where we are trading relative to these key levels every single time. And it doesn't matter if it's a horizontal level. It doesn't matter if it's a moving average, like I traded recently on Carvana multiple times yesterday in the tab, right? It doesn't matter, right? This is the 20 and 50 daily moving average. You better believe that these moving averages are going to be significant. They're some of the most significant moving averages that you can be taking a look at, right? So you better believe that when we break above it, people are going to be buying, very simply put. And again, this behavior is repeated on every stock, on every market, every single day, thousands of times a day. Because at its core, support and resistance matters to everybody. It's the only thing, one of the only things that matters to every type of trader in different ways, right? You can't say VWAP matters to a fundamental trader. You can't say your MACD matters to a fundamental trader. But there's always a key level that a fundamental trader cares about. And there's always a key level that a price action trader cares about, right? So it doesn't matter who you are. And there's always a key level that an algorithm cares about, right? Because an algorithm still has to enter at key levels. It still has to sell at key levels. It creates them, right? It figures out where the levels are that it needs to trade off of, whatever, calculations it's doing, and trades based off of those. And it's our job to understand where these levels are and determine what the market is doing with respect to them. So that's the significance of key levels, and that's a little bit about actually finding them. Now, obviously, a lot of the market is sitting at all-time highs. So you might be wondering, you look at the SPY, and we clean this up. We don't have any levels above here, right? We have our prior all-time highs, which again, a level you should care about, right? Notice there's no coincidence that once we broke the previous all-time high, we continue to move higher. Zero coincidence of that, right? None. Because nobody can deny that the market is no longer in a bear market once we're breaking the prior all-time highs. So as a result, you're going to see people buying. When we break key levels, people are going to be buying. And it's the same thing when we break them lower. It's just a fact of how the market trades. You have to remember that the market fundamentally moves based on how humans think, right? So at its core, people are going to care when price moves above or below levels because they matter for so many different reasons, right? This all-time high matters because it just does, right? You see on the news when the market hits a new all-time high. So you better believe that the previous all-time high is going to be significant. And when we break that, it's going to prove to make a move every single time. Every single name, every time we break an all-time high, it matters. So that said, I saw a question earlier, what do we do when the market breaks all-time highs, right? We can't just, decide this level matters now because we say it does, right? We don't know where the key levels are anymore. So couple ways to determine key levels above all-time highs, because this is especially relevant as the market is once again back to all-time highs. Number one way to determine key levels is psychological round numbers, right? The market loves round numbers. So for the SPY, it'd be 500, obviously, big round number, 490. And the next level above that would be 510, right? The market simply loves round numbers. And we could go back and mark some more. I have 480 marked, 470. And we could go on and on. And if you saw my SPX chart earlier, it's just a bunch of round numbers. 4,800, 4,900, 5,000, 4,700, 4,600. And I mean, you can pretty clearly tell that there's some significance to these levels, right? There's no coincidence that the previous pivot that we were looking at also happens to be a nice round psychological number, 4,300. And there's no coincidence that previous all-time highs are right around this previous level, 4,800. No coincidence in that. So that's the first way to determine key levels above all-time highs. And the second way, which your girl just asked, I'm not saying that to make fun of anybody, that's actually the name, your girl in the chat, asked about using extensions, Fibonacci extensions above all-time highs. So a couple ways to do that. You could go ahead and do the Fibonacci extension tool. To use this, you would start at a low, right? So pivot low, you draw or take it all the way to the next swing high, and then the next higher low here. So that'd be the extensions there. Another way that I recently learned from Tilio that I actually like a lot is doing these retracements and using the 127, 1.272, and the 1.618 above, which I've been really liking those as well. So that's what I have drawn up right now on my actual chart, is I'm doing that extension from this previous move here. So from this low to this previous high here, and I'm using this extension here as a key level, which you can see. I mean, no coincidence. You could find this level on my chart from weeks ago. We hit this level to the tick. I mean, the high of this day was 496.05. My level's at 496.14. So it's 9 cents off. Ooh, right. So those are two ways to find key levels. Is number one, the psychological level is always an easy one. Then you have the fib extensions or the fib retracement. So again, just to run through that, I know I blew through that pretty quick. So I'm going to clear this up real quick. So the fib extensions, again, you start at a low here. So I just start at the most significant low that I can see on this time frame, which is 52-week lows. Then to the swing highs, which the most significant swing high is going to be here. Then to the next higher low after that swing high, which is going to be here, right? And all it is just identifying pivots on the chart. Swing low, most significant swing high, and then the higher low after that swing high. So there's the extensions, right? And you can see how that kind of played out. It gives us a similar level, that 496.76, which I think is real close. Yeah, I mean, I had 496.14, so not perfect, but similar area there. And then again, as I mentioned, you could also do the retracements, which what I had for the retracements was I started at this swing high here, down to this low, and then I enabled the 1.272 and 1.618 above. And those are my targets. So then another target is right around the 520. And then if you want another target, the best name to do this on is NVIDIA, really. So let's do this on NVIDIA, which no coincidence, I already have them set up. So let's just add them more. Well, there's one that I'm missing, but that's fine. Okay. I don't remember the multiplier for what belongs in between here. It's 2.618 or something. I don't know. Let's see. Let's do the extensions. So, I mean, it's the same idea for anything that's above all-time highs. Again, starting at the low, going to the swing high, down to the next higher low. There you go. Let's look at how that behaved on the daily. There you go. I mean, it's not perfect, right? Because it's always going to be a prediction when you're using these fibs, but it gives you the right idea. So, you're going to go ahead and mark psychological levels in between your 600, your 700, which is already marked out here. And that's how you find levels when price is trading above all-time highs. Those are the two best ways that I've ever seen. I'm sure there's more that people use, some more funky stuff, some calculations, I'm sure. But that's how I do it. That's how most of us do it in here. And it works pretty well. Oh, God, Norvin, VRT. I mean, yeah, we could do the same thing on VRT, Norvin. Same idea. So I'll get that off there. Well, it's kind of not useful anymore, but we'll try it. So if we do the extensions from the swing low to the swing high to the higher low, there you go. There you go, Norvin. You're welcome. And I still have your long entries that I gave you. Here, let me give you another one. I always give Norvin some new entries on this one when he comes in here to talk about it. So got to make sure we're tracking them. Get long above there. There you go, Norvin. Okay. I just realized what time it is. We've covered a lot. How's everybody feeling so far? Are we understanding? There's a couple points that I want everybody to have a good understanding now. I want you to know what support and resistance is. I want you to understand why it matters. And I want you to understand how we're finding it. And we're going to run through a few more examples to kind of really get this hammered in. But how's everybody feeling so far about this concept? Are you all understanding why you're pretty much, I mean, you're pretty much an idiot if you're not caring about support and resistance. I mean, it matters to everybody. It doesn't matter who you are. It doesn't matter what type of trader you are. Support and resistance matters. And I promise none of you are idiots. I didn't mean that. I take it back. No, we're not done yet, John. You're seeing me for another little bit. Don't get too excited. It's the best way you like to trade. And it's very simple, right? Because paying attention to these, yeah, John, relax. You're not free to go yet. You're not dismissed. Yeah, I mean, the most important part about this lecture is really realizing how much understanding support and resistance can help you. Oh man, Dala, that's a brutal one. Understanding how support and resistance helps you frame your mind when thinking about trades. Like, for example, a trade I took on Carvana, right? I can't trust it enough. Terrible stock. I mean, horrible company, and terrible stock, right? It's just, I don't know. I'm a little bit addicted to the small cap. So, you got to love them. Anyway, right? Simple trade here. You see it hold this 40 buck area a couple times in a row, right? Clearly a very significant level. But we got two big levels sitting right above the 20 and 50 moving average. So you don't need to wait, or you don't need to be getting long right at 40, although this time, obviously would have worked great. I personally don't trade like that. I'm not in the business of catching the dead bottom, but rather once we see strength after that dip, which we saw yesterday, right? And we break above some of those key levels. Actually, let's walk through that trade. And I'm going to work on a recap of that. So I'm going to kind of walk through my thought process. But finally, I was in the frame of mind to actually be able to give a trade in the tab. It's been a while. So here you can see what I was looking at, right? This is what the chart looked like. We're holding this level of support, 40.65, and we're sitting right below two key moving averages, which are important key levels, right? You can see how price has been reacting to these key levels, right? The yellow is the 20 simple, the orange is the 50 simple, right? It's very obvious to see that traders care about these levels, right? Algorithms are buying and selling shares at these levels because these moving averages are generally accepted as fair prices for the stock over a specific period. So you can see here in pre-market, we're kind of just going to walk through my line of thinking. In pre-market, we break above both these levels with some decent bull bars closing near their highs, and then it's a terrible company, so you're going to see those crazy dumps sometimes, right? Then market opens, we get a little bit of a dip down below those levels. One thing that I want to note with support and resistance, sometimes you have to squint, plain and simple. And this is something that Shark taught me is support and resistance isn't always going to move right to where you think it is in reverse. So sometimes squint and then it'll look like your level held to the T, right? So it's not always going to work out perfectly, but generally speaking, we came down to this level of interest. I got long. Very simple. And okay, I didn't post any more charts off of after that, but let's walk through. Okay, I still have my levels. So then obviously, you have your entry where that matters. And then you want to think about where am I going to take profits? And there's two levels that I had in mind. 1, 2, this level. Is it obvious that there were sellers parked at this area? 3 perfect wicks directly off of this level. I can't tell you why people want to sell at this 46.71. Can't tell you why, but it's very obvious, right? 1, 2, 3 perfect wicks off this level. So you best believe that I'm going to care about it when we revisit it. So let's highlight that and we'll come back to it. The next is 47.70, right? Same idea. A bunch of rejections off of this level here. So I'm going to care about it when we get there again, right? So let's take a look. Let's zoom in a little bit on the 5-minute. Clean this up. And let's break this down, right? So thankfully, this whole trade was documented in my tab, and we can walk through this. So 6:54 a.m., 6:55 a.m., I started selling. What happened at 6:55 a.m.? We showed up at my first target, key level from the 4-hour. So I sold some, right? And look at that. Sellers stepped in because there's no reason they wouldn't. They have in the past, so they did it again. Okay. But important to note, and this is a good lesson here, we never know where the top or bottom will be for any stock. We never know, but we can make guesses where the probability is higher. And at this level, the probability is higher that this might be the high of day. So I'm going to reduce some of my risk and trim some of my position. But if we take a look at some of the intraday moving averages, it's still in a complete uptrend. 9 EMAs above the 20. There's no reason to be short. So I'm going to stay long. I'm going to hold some of that position. Things in a complete uptrend. It's just found some sellers where it should. Nothing wrong with it. So I sold some and held the rest. Next message was at 7:18. Next target was 47.7 and trim some at 7:25. 7:25. Well, I guess that's when I sent the message, but here it was at the same target, right? Trimming some right when we get up to that next level. And you'll notice sellers stepped in once again. And you'll notice later in the day, we grinded up, made it above that level. And today we were even a little bit higher, but it doesn't matter, right? Could I have held more of the position into the rest of the day? Yeah, probably. I probably could have, but in the many car, no, I'm not holding any. I was all out here because this was the highest profit target I had. This was a 10% move in the day. And it's pretty foolish to be looking for more after a 10% move, but I still do like it for higher now that we had this day of rest. But that said, right, this is a window into how I trade with key levels, right? It didn't take much, right? There was a couple ways that this trade worked out. You have a key level that price is holding on the daily, right? You know that buyers are present in this stock. We have 2 clusters of key levels that price broke above the 20 and 50 daily moving averages. We have one final pivot, this 45 area of resistance here. A couple levels on the 4-hour to be mindful of, but that's it. And all you do is once you get your entry based on that key level, you kind of just wait. And if that level doesn't hold, like for example, if this bar looks something like, let's see, this bar looked more like 43.8 and 43.9, right? If we saw some action like this, and just ignore that green candle, you probably should cut, right? You're probably wrong. Price isn't holding above your key level. It's looking like sellers are actually rejecting that level. You rejected right off your 45 buck level. So you should probably go the other way, right? Plain and simple. And to be honest, I actually tried trading it again today. And I tried to structure a trade off of this 47.70 level here. And price started moving lower. And I said, you know what? I'm good. I'm not gonna, not gonna waste any time with this. And I ended up selling it when we broke VWAP, like right around here for, it was like -8%, only for it to rip right back above and make it back to the high of day. So I got tricked, and it's going to happen, right? Your levels aren't always going to hold to a T. Price isn't always going to move the exact way that you want it to. But understanding where the key levels are and understanding what you need to do at them helps you have the right frame of mind when entering into any position or even considering a position on any stock. Another great example from today is Google. Amazing example from today is Google, right? 144 level is this high from the bear gap. This was a gap down following a less than beautiful earnings report, or at least a less than beautiful reaction to earnings. 144, right? This was the high that price made after earnings right here. But we've started to fill that gap today. So this wasn't a trade that I did take. I was watching it, but didn't take it. So I can't claim it, unfortunately. But price came right into this bear gap today, and it made it below it. I saw this break below, and I was like, okay, I'm going to kind of stay away. I saw this bar when it started to look like this. It was looking like, let's see, 144.1 and 144.1. So when I first looked at the chart, it was looking like this. And I was like, okay, I'll probably be able to get in if we close back above and retest it. The problem was we never looked back. Oops. Oh, I just removed that candle. What? Okay, I didn't know I could do that. Anyway, I was looking for this price to come back above this level, retest it. It didn't come, and I never got an entry. And of course, epic ripper day, but what can you do? Manucar, great question. How do you set stops at these levels? That's an excellent question. So obviously, when you're charting, and yeah, that's a good one, Bella. Obviously, there's a lot of levels that are going to matter for any given stock or just in the market in general or in trades that you're looking for. What I do to keep track of where price is relative to my levels is I set alerts. So you can see I got an alert waiting for me if Google comes back down to this 144 area, and it's a couple cents above in case, I want to know a little bit before. But if price comes back down to this 144 tomorrow, I'll probably slap some calls on it, right? It's an important level. It's that bear gap after earnings. Price is in an uptrend, right? We got the 9 above the 21. We got that nasty gap on earnings, which is a little bit of a bad look, but I mean, so far they're buying it right back. And really, if I was smart, I would have just bought down here at the weekly point of control, obviously important level there, but didn't do that. So here I am, a couple bucks higher dealing with it. But that said, the way I keep track of my levels is set alerts. So I'm always setting alerts at different important levels. Tesla, for example, I have an alert waiting for me at this 195 area, right? 195 is this prior low here that price hasn't been able to make it above. I really don't care to even look at the stock until it's above there, although I do still own shares, which is funny, but I really don't care what happens until it either breaks below that on the weekly or breaks above that. There's nothing for me to do here. I don't really care. So I set my alert and I wait, and I'll come look at it when the alert hits. And that's the same way I deal with stops at levels. So when a level that I would be treating as my stop loss breaks, my number one priority becomes risk management. So once you have a key level that you're treating as your stop loss, and price breaks below that. So for me, that was Carvana here. I was looking to enter off this 47.60 or 70 here, and I was looking for that level to hold. It didn't hold. So I was watching the action below, and I was actually paying attention to what it was doing at the VWAP here. So let's pull that up and make that look a little bit better. 1 second. So I was paying attention to what it was doing at the VWAP. And I was like, okay, it's below the level, but it's still kind of setting a higher low, still kind of holding up here. Then it broke below, and I was like, all right, I'm gonna call it. It's not working the way I thought it would. I thought the level was gonna hold right here, and we weren't gonna be seeing this type of action. We were getting some higher lows into it, but it didn't hold. So I was like, okay, you know what? I'm gonna take this one off. Ended up selling somewhere right around here. For under less than 10%. And then ultimately that was the low, and it ripped 3% after I sold. So you got to love it. These things are going to happen. Is there anything I could have done better here? Maybe. maybe I should have been more patient, but I don't think there was anything too wrong with the trade. It's just didn't work out the way I had set in my mind and didn't give it enough room. So that was it. I probably could have let my stop loss all the way down to here, but I didn't. So that's how the cookie crumbles sometimes, and it's okay. So that's how I would manage a stop out, and that's how I did manage a stop out today based on key levels. Yeah, Fernando, how about T? And yeah, let's run through and chart some key levels together to round this lecture out. So let's clean everything up. Let's take off all the indicators. So T, when looking to chart key levels, the most important thing to be mindful of is the trend, right? What is the trend right now? And for me, the trend on T is up, right? Higher lows, higher highs. And in terms of key levels, I already have the one that I care about most charted, which is 1733, which is this prior swing high right here. And you'll notice the last time we broke above this swing high, we tried to hold above, ended up gapping right back below on divvy day. And then the next time we ripped almost the whole dollar. So for me, actually, I actually didn't see where this closed. I probably would have swung some calls. I bet you River probably swung some calls on it. But 1733 or 30 really is the most important level. If it gets back below it, you should probably be looking short. If it doesn't get back below it, I don't really see much of a reason not to be long. Let's see. Definitely starting, excuse me, starting to show some of the signs of a downtrend. We're getting some of the EMAs crossing to the downside like we did here. However, we're sitting right at this key level, 1733. So, and obviously the daily is still in an uptrend. So I would say I like it long more than short, to be honest, Fernando. But I see why you'd swing puts. I mean, you got a little bit of an increase in selling volume. So I don't hate it. But the way that I got this level is pretty simple, right? All I was looking is that. That's the pivot right there. And then the other level that I had marked was this one, the swing high above that where we saw that rejection. That's it. And I mean, we can look at how these levels behaved on the 5-minute. Yeah, perfect, right? Exactly what we would expect on a breakdown. We get a big bar. We get a little bit of a consolidation, pretty much no buyers here, right? As we break below. I mean, this is one thing that's really evident when you get a strong breakdown. You get a big bull bar or bear bar breaking below a level, and the only green bar you have is, I mean, you can just like see that. Like, let's zoom in a little bit more here. I've sent pictures like this in Trade Floor before. There's clearly a pattern here, right? There's very clearly a pattern here. Every single red volume bar is way bigger than any green volume bar. And you'll notice the first green bar we get under this level is on some of the lowest buying volume until a couple hours later. So just goes to show there's no buyers under this level. And it just gives you more confidence that this level has broken. And this is a place where you probably shouldn't be long anymore. So that's T. We did go over a SPY a little bit, but we could talk about a couple more levels. Franklin, if you see the 200 EMA cross the 50 EMA, is that called the golden cross, which is bullish? I mean, technically, yeah. I think people generally study that more on the simple moving averages. That said, I don't really consider that like a bullish signal to like enter or get long, but it's something that I'd be mindful of. But obviously that's a really lagging indicator. Just looking for that cross to get long, but it's certainly something to be mindful of, and definitely signifies a change in trend, at least on the higher time frames. But for something on the daily, I generally prefer the EMAs, the shorter term EMAs for kind of that short term trend direction, just because my focus personally is generally on the shorter term rather than the longer term. So, like for example, this 9 EMA crossing below the 21 would be more significant to me, and maintaining below that area. So that's kind of how I see it. All right, we'll take a look at SPY real quick into tomorrow. So obviously, these are the levels that I have into the week. This is what I started the week out with. There's really only one level that matters above for me right now, and it's 500. That's it. And SPX 5000. That's the only level that matters right now. Price is pretty extended away from the 9 EMA, so this would make sense for a place for some sellers to step in, but You really can't doubt the strength of this market. I'm not going to be the one to do that. Um, so I wouldn't be surprised to see this thing move higher. That said, um, it's not at a place where I'd be particularly bullish. We're sitting right at 5,000. So for me, this is a place where, I'm not really bearish. I'm not necessarily I don't really like looking for puts in this strong of an uptrend personally. It's just not really how I like to think. However, my foot's definitely off the gas on the long side because we're sitting at such a key level, right? The risk to reward to getting long is much lower here than it was, when we were back at the 9 EMA. PayPal, I think, just reported earnings today, right? Yeah, so tough reaction to earnings. Honestly, this is one that I don't really pay attention to at all right now. Way too many people have their eyes on this, and I'm not sure what there is to like. Um, Me personally, I'm not really a fan. It's still completely in a downtrend. There's no uptrend on this weekly chart, and there's no signs of an uptrend developing as well. This is textbook lower highs. I mean, it's all lower highs and lower lows. So there's not even a reversal brewing here for me. There's no accumulation volume. I don't like it right now. It's not something I'm a buyer of. If I knew more about the fundamentals of the company, I'd probably be looking to buy it, around here and around here, but I don't. It's not something I'm interested in right now, especially for a short-term trade. Yeah, I mean, inverse head and shoulders, yeah, maybe. I mean, you could call it that, I guess. It's going to be invalidated now though with this gap down to 58. If that doesn't break below the 57 area, I guess it still works, but I don't know. Not really my favorite. And even so, I mean, sellers are still completely in control. I mean, every above average day is selling. There's one above average buying volume day here, but every other above average volume day is still selling, which to me, that's no indication of something that's looking good for the long side. Now, something that did look good for the long side was Shop. Completely different story. Completely different story, right? We saw the weekly on PayPal where it was continually setting lower highs and lower lows, whereas Shop doing the opposite, right? We have this big amount of accumulation volume as price goes nowhere in this area. We set this final lower low and then start setting lower highs as we're moving out of the space. We get the 20 weekly over the 50 weekly. That's a big deal, right? That's generally the first sign of price making it out of a stage one base, as well as this break above the 50 weekly moving average. So big, much different chart for me on Shop. And yeah, I'm sure Spot looks not quite the same, but same idea here, Norvin. So yeah, little bit of a difference there on PayPal. It's not something I'm super interested in at this point, but um, yeah, PLTR. I can't lie. That's also something I haven't really been interested in. This trend looks terrible. I mean, this doesn't look great. But earnings changes things real quick. And as you can see, that's exactly what happened. And sometimes earnings is what you need to change the direction of a stock. And very commonly, you see that happen. NVIDIA is a great example of that, right? You get this one big report, and all of a sudden the stock never looks back. Same with AMD, right? You get one real big report back here, you change the course of a stock, for a long period of time. So something to be mindful of, especially when you're paying attention to support and resistance. The more significant the break, the more it matters. So, for example, let's think of a big breakout recently. I mean, Meta is a big one, right? Meta, obviously, big level at these prior all-time highs. And it broke above that level the prior week. And not only, I mean, held above it, but it significantly ripped above it, which just shows that so many people got caught off sides. They didn't understand, I guess, the potential here, which, I mean, I can't say that I was buying shares, here, but I wasn't interested in that anyway. That said, you want to be paying attention to the significance of breaks of levels. And also, one final example that I want to bring up is the significance of levels following news. So here's the only level that I cared about on Meta. And I even posted about it in here. Meta moving into the lows following the big earnings gap, should be looking for some buyers. Here would be a solid day trade. This is the level that I was watching. If we take a look at where this comes from on the daily, on the daily. This was the low of day following the earnings report. You zoom in on the 5-minute. Look at how price reacted here. We come back into that level, huge bounce off of the intraday. We come back to it in pre-market, hold around for it, and never look back. So levels following news can be so important and so amazing to trade off of. Even something like the FOMC. Oh, I don't know why I just put the FOMC in there. So when was FOMC? Last Wednesday, I think. I think it was last Wednesday. Here you can see, I mean, this is an excellent example too. Let's clean this up. This is the high of day after FOMC. Do you think that's a coincidence? It's not. It's absolutely not. So levels following news, super, super significant. Definitely another great way to be trading with key levels. And I mean, another good one here is after big tech reported, another nice key level there. A couple places it showed itself. Is there any more major news this week? Oh man, I honestly, I have no idea. There's been so much recently, I've kind of lost track. All right, got a couple questions here. 496.85 on SPY on some of the lower time frames. Do I think that's a good place to scalp some calls? I got a similar level, 496.14. You said 85, which is 496.85. Right there. Yep. I definitely agree with you there. I mean, very clearly, multiple times today, we saw significant buyers at that level. If we revisit it, you should expect to see the same. Same thing here at this 496.14. If you're scalping, might be significant. I agree with you. But remember, the time frame that levels come from matter. And the lower the time frame, the less significant. So for example, something coming from the weekly is going to be much more significant than coming from the 5-minute. Only look at the EMA 550 EMA in short term. No, I don't generally look at the 200 EMA and 50 EMA personally. I generally look at the 250 and 20 SMAs, and that's in the longer term. But as for EMAs, I look at the 9 and the 21 EMA. And you understand about support and resistance, but in your day trading, what other indicators do I like to use? Volume. That's the only other indicator that I like to use that lets me know if there's buyers or sellers present. Volume and price action and key levels. That's it. There's no indicator that I use that tells me if there's buyers or sellers. It's simply the volume, right? That is the amount of buyers and sellers. The price, that is the strength of buyers and sellers. You get bull bars closing near their highs. Buyers are strong. You get bear bars closing near their lows. Sellers are strong. You get that on high volume. That's an even more strong move. You get that as you're breaking through a key level. It's even more significant. All right, Norman, last one. And this is only because it's a new one. BULZ. I have no idea what this is. Is it SPY? Leveraged? That's awesome. I like the TQQQ. Can I show the slide for support and resistance? Yeah, let's pull that up. There you go. Oh yeah, here you can see some of my answers to the why do they buy and sell question. All right, everybody. Well, I think we're going to call it here. As always, I appreciate your time. Okay, DTNZ, sure. DNTZ because you're not Norman. Oh, never mind. I'm not looking it up. I know what that is. I know what that is. Somebody's got that. Somebody's got me with that before. I know. All right. Thanks again, everybody, for being here for the evening. Really appreciate you guys' attendance. As I always say, these lectures are nothing without you guys. I can't just sit here and talk to myself. It'd be way less fun. So I appreciate you guys being here. I hope you guys all join me in the next one. And if you have any comments, questions, suggestions for future lectures, please reach out and let me know. I can't read you guys' minds. I wish I could, but if you got something that you want me to teach on in the coming weeks, let me know and we'll get it on the schedule. Yeah, thanks for staying, John. The teacher didn't dismiss you, but now you're good to go. All right, everybody. Thanks for being here. Hope you guys have a great rest of your night and you learned something, and we'll see you all in the next one. Adios.